Hey, how's it going, everybody? Mike Weber, your Los Angeles real estate broker, here with your market update for the beginning of October 2023. First off, obviously took a month off from doing the videos. I had a few people reach out to me, and I just wanted to thank you guys very much for that. I've had a couple personal things going on and also studying for a big finance exam, so I've been trying to give myself as much time as possible for that. But I definitely wanted to get out another update video to you guys. Things are getting crazier, if you can believe it. In general, what's happening here in our local real estate market, I mean, kind of a continuation of the same trends we've been seeing. Obviously, we're in this paradigm shift now where it might be higher for longer in terms of interest rates being set by the Federal Reserve, and that is impacting real estate in a very big way. We came off a very, very long period of artificially low interest rates, which obviously drove up real estate prices, drove speculation, and ultimately caused a large percentage of all the residential mortgages to be financed at relatively low interest rates that are vastly below what the current market rates are. And so that's turning out to cause two problems, really. On the one hand, it's making it a lot less affordable for buyers and causing a lot of buyers to not be able to buy. But in addition, it's also causing a lot of sellers who otherwise probably would want to sell and make a move to not want to make a move themselves, either because they don't want to pay the higher interest rates or because they can't afford the higher interest rates. Now, obviously, the big question is going to be, does the Fed pivot? Everybody, I think, in the market expects them to pivot quickly, maybe next year. But at the same time, we have a real issue on our hands. I'm sure most of you guys have felt the increase in prices pretty much across the board. Inflation is really kind of spiraling out of control, despite what we're probably being told to a large extent in traditional media and those sorts of things. And the question is what is the Federal Reserve and the government going to do to combat this inflation? The only tool they have to do that is to keep interest rates high for an extended period of time, and in fact, raise them probably a lot more than they are right now to shift the patterns that have been happening in terms of investing and speculating and all those kinds of things. But in order to do that, we have a huge debt problem on our hands, and the interest rate on the debt is going to cause the interest payments to skyrocket and create all kinds of problems for a government who's addicted to deficit spending, so on and so forth. But in any case, let's take a look at what is happening here in our local market, Los Angeles County. So the first thing I want to show you guys here is just median home prices in LA County, and we'll look at the long chart, the longest view that my data supports, which is about 15 years back. And what we see is that if we look at the long-term trend on the chart, clearly when interest rates went to zero, prices started rising, and I mean they've been rising ever since. However, when we look at a couple year trend lines and pattern, we see that we've really been kind of moving sideways, and in fact, prices have come down to some extent in Los Angeles County from their all-time record peak. Now, there is information coming out that we are starting to see some price declines in the West and in certain parts of the country, but of course, in other parts of the country, prices are still rising. All of the support for the prices being as high as they are, whether or not they're coming down slightly, depending on the area, is all because of the issue we're having with supply. So there's just not enough supply out there, not enough sellers willing to sell. And of course, we mentioned a little bit why that is towards the beginning of the video. Now, next, if we look at closed sales, we see things are not looking any better. We're down about 22% from a year-over-year standpoint from an already soft year. So closed sales have not been really looking much better since the last time I talked with you. In fact, they're looking worse overall. But I think the thing that really looks kind of scary is what I'll show you next, and that's pending sales. So check out this graph for pending home sales. I've kind of highlighted the area in 2020 where we were in lockdown, and there was a period there where real estate agents were not considered essential, and we technically were not even allowed to transact real estate. It was, illegal for us to be out there. Of course, all the offices were closed, recorder was closed, appraiser was closed. And even with that said, we've actually surpassed that to the downside, and we're seeing pending home sales less than that all-time record low we saw during the COVID lockdowns, if you can believe it. And overall, that's about a 45.7% drop just from a year ago. And of course, we're in uncharted territories now. I don't know if we got this low back during the crash in 2006, 2007. I haven't went and compared the charts to any sort of old data that I can find. But needless to say, it's extremely low, and we do not have a lot of homes that are currently in escrow. And the last thing we'll take a look at is active listings, and we see kind of same story there. There's not a lot on the market right now. We're down 32% year over year, kind of trending downward year after year for quite a long time now. So it's a very, very tight real estate market. There's not a lot out there, and because of that, there's still buyers that want to buy, that can afford to buy, that have the cash or can get the loan, and they're willing to buy whatever inventory is currently available. So even though we're in these very high rates, somehow we're also having very strong prices and very low inventory, which is an interesting situation to be in. I think there's certainly a possibility that rates could end up staying high much longer than everybody expects. There's always the possibility the Federal Reserve does the right thing and really tries to stop inflation. Maybe at some point the government, starts to cut back on fiscal policy to some extent, which would also be a hindrance to real estate prices going forward. And if those things do actually happen, certainly these elevated real estate prices along with elevated interest rates are not going to be something that probably will stick around for a long time. But of course, who knows? There's always surprises in store, it seems, in the crazy world that we live in. In any case, how can I help you guys or someone with your real estate needs? Reach out to me. Let me know. I'm here to help. Leave comments down below to let me know what you're seeing. I really appreciate you guys watching, and I'll see you guys on the next video. Take care.